Hi everyone. Today we are going to discuss about Ind AS 4, which is about contingencies and events occurring after the balance sheet date. So in this chapter we are going to cover two topics: contingencies and events occurring after the balance sheet date. So first we will start with events occurring after the balance sheet date. So what is events occurring after the balance sheet date? Let's see with some example. So let's consider our financial year starts from 1st April 2024 and ends on 31st March 2025. Okay. So for this financial year, our financial statements will be prepared on 31st March 2025. So our balance sheet will be prepared on 31st March 2025, right? So, what is events occurring after the balance sheet date? If any event occurred after this 31st March 2025, that is the balance sheet date, those events are termed as events occurring after the balance sheet date, right? So, you can ask me, many events will occur after that balance sheet date because the company is a going concern and many transactions will take place in the company, and many events will also occur after those balance sheet date. But there is one restriction. Any events happen after the balance sheet date, but before board of directors approve those financial statements, those events only we need to consider. Those events only will termed as events happen after the balance sheet date, but before board of directors approve those financial statement. In our case, books will be closed on 31st March 2025, right? Financial statements will also be prepared on 31st March 2025. But board of directors approved those financial statements on 1st June 2025. So here, uh, which is that period where events will be occurred, that is the reporting period when the events will be occurred after 31st March 2025 and before 1st June 2025. That is any events occurring between these period, that events only we should consider, and that events only is termed as events occurring after the balance sheet. Okay, so which events we are going to see in this AS4? Events occurring after the balance sheet period and before the financial statements are approved by the board of directors. In between these 2 months or 3 months, any events will occur means that events whether we need to disclose in the financial statements or not. That thing only we are going to discuss in this chapter, because during this period any events might occur. It might be a favorable event or it might be an unfavorable event. What is favorable event? If anything happens positive to the entity, means if anything happens profitable to the entity, means it is termed as favorable events. Suppose if anything happens adverse to the entity, means it might be a material one or it might be a significant event also. If anything happens adverse to the entity, means it is termed as unfavorable event. Whether it is unfavorable event or favorable event, if it is a material one or it is a significant event, means we need to disclose those events in the financial statements. So in this chapter we are going to study about two kinds of events: adjusting event and non-adjusting event. Adjusting event means the name itself, it signifies we need to adjust these events in the financial statements. For example, let's go with the example itself. We will deal with many assets and liabilities, right? We will deal with many creditors and debtors also. Whether favorable event or unfavorable event, if it has a material or significant impact, it may be a adjusting event or non-adjusting event. So what is adjusting event and not adjusting event, that only we are going to discuss now. If it is a adjusting event, means we will adjust those events in the financial statement. If it is a not adjusting event, means we won't adjust anything in the financial statements. For an event to be an adjusting event, there should be a condition existed on that balance sheet date. In our example, our balance sheet date is 31st March 2025, right? So, some conditions should be existed on that balance sheet date to treat this event as an adjusting event. Let us discuss with an example. In a company, there is a manager. What he did means he has stolen some goods and he sold it in the out market. Okay, he has stolen some goods on 1st January 2025, and the management was not aware of it. Whether he has stolen or not, management was not aware. On 31st March 2025, books were closed. Okay, but on 1st May, by watching the CCTV camera or something, they found that manager has stolen some goods on 1st January 2025. So here, whether this is an adjusting event or not, he has stolen some goods worth 1 lakh. Okay, so whether it is an adjusting event or not, here the management has discovered it on 1st May 2025. Our reporting period is from 31st March to 1st June 2025. That is on which date the financial statements were approved by the board of directors. But the management discovered that a theft has happened on 1st May 2025. Okay, whether it is an adjusting event or not, it is an adjusting event, because what is a main condition for an event to record it as adjusting event? There must be a condition existed on that balance sheet date. Here on 1st January only the theft was happened. So on that balance sheet date a condition already existed, because theft happened on 1st January 2025. Management discovered it lately. So that's not an issue, right? The theft happened on 1st January 2025. That is, a condition has been existed on the date of balance sheet date. So it should be considered as an adjusting event. Another one example for adjusting event. A fraud has committed by the manager on 1st January 2025. He has made some bogus entry in the books. It was discovered by the management on 15th May 2025. Whether it is an adjusting event or not, it is an adjusting event, because a condition has been existed on the date of balance sheet. The fraud has been committed on 1st January, right? Management discovered it after the balance sheet date, but before the financial statements were approved by the board of directors. So it is termed as adjusting event. In simple terms, for an event to classify it as an adjusting event, there must be a condition existed on the date of balance sheet. Okay, then what is non-adjusting event? There must be no condition existed on the date of balance sheet. Then it is termed as non-adjusting event. For example, you gave one 5 lakhs to a debtor. Okay, a fire has broken out in his industry. On which date? We can assume on 1st May itself. On 1st May, a fire has broken out in his industry. Whether it is an adjusting event or not, it is a non-adjusting event. You gave one 5 lakh to your debtor. Okay, on 31st May a fire has broken out in his industry. Whether it is an adjusting or non-adjusting event, it is a non-adjusting event, because on 31st March there is no existence, on there is no present condition that fire might occur, right? There is no possibility on 31st March that fire might occur. There is no evidence of such condition existed on that balance sheet date, right? So it is a non-adjusting event. To summarize, adjusting event are those events for which condition must be existed on that balance sheet date. If it is a non-adjusting event, means no condition will be existed on the date of balance sheet. Okay, then what do you think about proposed dividend? On 1st April, the company is declaring some dividend to its shareholders. Whether it is an adjusting event or not, it is a non-adjusting event, because it is a proposed dividend only. They not actually paid the dividend. They told we will provide you some dividend. They just proposed the dividend. It is not an actual dividend. So it is a non-adjusting event. In case of proposed dividend, the company just declared the dividend. It doesn't make any payment to the shareholders, right? So only a declaration does not create any obligation for the company to record it as a liability. Clear? So proposed dividend are always non-adjusting events. We can give a disclosure in the notes to accounts. Okay. Next one important area, events indicating going concern assumption inappropriate. So what is going concern assumption? There is no end to the company. It will go on forever, right? If anything that affected the going concern means, if any event that affected the going concern means, it is called as adjusting event. For example, on 31st May, a fire had broken in your industry. A fire had broken in your industry, then it is termed as adjusting event. If it affected a major part of your business means, it is a material event, it is a significant event, and it affected your going concern, so we should consider this event as an adjusting event. Because due to fire your production might be affected, right? Your major production plant might be affected by that fire. Because of that you was not able to do further production. Only your, when an industry is running you can make a profit, right? Because of fire no production will take place and the industry will also be stopped, then it might affect your going concern. So when it affected your going concern, it should be disclosed as an adjusting event in the financial statements. Though it is a non-adjusting event, it happened after the date of balance sheet date, no condition has been existed on the date of balance sheet date, we should disclose those information in the financial statements because it affected our going concern. Okay, to summarize, there are two events occurring after the balance sheet date and before the financial statements are approved by the board of directors, that are adjusting event and non-adjusting event. Adjusting event means evidence of such condition should be existed on the date of balance sheet. If it is a non-adjusting event means no evidence of such condition has been existed on the date of balance sheet. If it is a adjusting event means we will make those adjustment in the assets and liabilities in the financial statements. If it is a non-adjusting event means no such adjustments is required. Let's see the disclosure requirement. In the disclosure we need to give the nature of event, what kind of event has occurred, then the financial effect of that event, whether 1 lakh or 5 lakh or 10 lakh, like that the financial effect of that event also be disclosed. If we not able to quantify means we can't able to estimate what is that amount of financial effect means, we need to give that reason why we are not able to give such estimate, like that we need to give the reason for that.